Welcome to Ahead of the Curve. Subscribe now.
Welcome to Ahead of the Curve 1776. It is me, Mr. Curve. Hope you guys have had a swell week so far. A lot going on, guys. Lots of good trades, lots of crazy trades, lots of crazy environments. Kind of all over the place. I'm also developing several different systems as well too. I'm in a lot of markets, guys, so it's a lot going on. I appreciate each and every one of you guys. Big thumbs up to my 6.1k subs. Appreciate each and every one of you. Please like, comment, share each video, guys. Excellent information, very informative, entertaining. This is Ahead of the Curve. We talk about everything from economic data, monetary policy, politics, market, and trading strategies. Here's my videos here, guys. Like I said, please like, comment, share, subscribe. Also, check out these feature channels as well. They do excellent content as well. Also, subscribe and join, guys. Click both of these. To join, just $5 a month actually helps the channel immensely. It gets me personally paid. It helps the creation of the channel, me adding more emphasis to the channel, and basically getting more influence into the channel as well, to maybe getting some guests on here and doing certain things, guys. So I appreciate that. Maybe doing some contests, some giveaways, etc., guys. My Patreon link is also at the top. I do give signals over there as well. Make sure you use the Robinhood so that way I get credit. Make sure you use the Webull as well, and FX Choice for Forex and different spot transactions, and then EToro for cryptos, guys. So let's get to the markets and let's get to the money. Went over a little bit of data for the week ahead. We definitely did. We're looking for a higher number for that Empire State Manufacturing Index. I knew it was going to be higher just due to the reading being so low. I knew we would probably at least squeak out a goose egg, or at least higher. That was positive for Monday's trading. That definitely gave a nice catalyst, a nice boost for what we were looking for in the markets on Monday. We also had the ECB President Lagarde spoke as well. A lot more reiteration of the same. They're just going to be basically watching inflation. The Lagarde hints at raising central bank inflation target. Now, at some point, they probably will. That way they can kind of meet that median, because over time that 2% will probably get hard to achieve, so they might settle for 3%. I don't think it'll be a huge deal. I think just due to the impact of everything going on, they might have to settle with the 3%. But here we go. Let me go back here. Click the wrong button here. Let's scroll down. We have the Australian monetary policy minutes. So that was a big deal. Basically, they were more of the same as well too. I did read the minutes. A very light indicator, even though this is medium, it was light. The big news of the night was the GDP quarter over year for China. That definitely got the markets moving after the introduction of these economic reports here, so it was very nice. They're doing pretty well overall. The retail sales are strong. Unemployment is pretty strong. They are having some commercial real estate issues over there, but their GDP isn't overall bad for the quarter over year. And then we got the the claimant count for the UK here. We got 28.2K. It's pretty high. I mean, we were expecting a little bit of a lower reading, which would have been better, but we got a negative reading there. We have average earnings also still pretty high, 5.9. That's not bad. Employment rate definitely did tick up, so we are definitely seeing the G7 overall slow down. We also had the Euro German zoo economic sentiment, kind of like the preliminary University of Michigan sentiment. That was negative, low enough for reading, but probably the next reading will probably be negative. We have the zoo economic also down. Then we had the Canadian CPI. We wanted to see what their situation was going over there. We had the CPI coming down a little bit, so I think overall we are slowing down, guys. Year over year median was 4.6. The trend was 4.4, and then the common was 5.9. So, all in all, guys, it's about a 6%, which isn't bad. Between the U.S. and the Canadians, pretty much at the 5-6% mark, which is coming down, guys. Again, we will have that aversion between the federal funds rate as well as inflation. At some point, those two things will cross paths there. We also had the CPI. I was expecting a higher reading just due to all the UK's information on Wednesday this morning. It was a lot going on, and I knew for a fact it was going to be higher than the 10 mark. Whether it was 10.0 or 10.1, I wasn't really sure, but I knew it would be higher just due to all the readings prior to this reading were higher. and they've actually been steadfast and haven't done a lot, just probably due to the signaling of the Federal Reserve. But at some point, they probably will all have to at least continue hiking. They're just going to let the dollar catch a little bit of its breath with raising rates before they allow them to raise rates a little bit further. Also, we could be having some cyclical things and some systemic things happening that maybe it's just overall going to slow down. They don't have to use rates anymore. They will just let the markets actually do it themselves. A little lousy for a moment. We'll scroll down here. We have the Euro final CPI. It's a light indicator, but it's kind of important, especially what's going on with this inflationary environment. 7% on final CPI core was about 5.7. Scroll down here, guys. We basically had crude oil inventories was down. Again, guys, are probably going to start seeing lower readings here. Despite this number being negative, it was not inflationary or not a bid up for oil today. It actually pushed oil overall down, even though the dollar lost a little bit of steam today. So it was definitely different there. We also had the beige book. It's a light indicator, but it's very important, especially with everything going on. I did read the beige book. Not a lot going on with it. Basically, like it says here, U.S. economy stalls as credit narrows. They are going to let the credit markets determine, where we go from here. At a certain point, hiking has to follow through the system. We have to have higher mortgage rates, higher auto rates, higher consumer loan rates, and then at that point, that will curtail people's pocketbook, and then that will bring down overall inflation. Then also we had New Zealand. I was waiting on this report too before I was recording here. New Zealand's CPI quarter over quarter was 1.2, a little bit off the beat. If it was higher, would have been worse for the dollar, at least initially for the first impact. But it wasn't, so it definitely gave way for some dollar strengthening there because we are still on a tightening path. A lot of the export economies are not tightening anymore for the most part. We also have tonight, Governor Lowe will be speaking from Australia, Central Bank Reserve Bank of Australia. I'm not expecting a lot here, just due to the fact that I hate to say, it's a smaller economy and not really a lot going on. Unless he's going to, give us some insight on a possible pivot, it's not going to really move the markets at all. Tomorrow is going to be huge. Unemployment claims, I'm expecting a decent number, just due to all the reports of consistent layoffs and thousands of layoffs. I'm expecting this number to be at least maybe a 3 handle. Probably maybe a 275, maybe 3 handle. Philly Fed, I'm expecting a negative reading there just because we had 2 consecutive ones prior to this reading. Consumer confidence, expected negative as well too, even though it's a light indicator. And existing home sales, for some reason, I'm expecting this will probably be right in line of what this is. It might have a beat or it might miss. It just depends. Maybe a 3.8 handle, maybe about a 4 handle. I think that's going to be the least of people's worries at this point. They're not really concerned about the economy. We're really concerned about, at this point, the key pivotal focus will be jobs, because we need to get those jobs out of there so that we can have a more deflationary environment, which will get the Fed exactly what they want. They know exactly what they want, and they will stop at nothing to get it. So basically, guys, tomorrow, this will be overall a negative tone for the markets. But one thing you got to consider is, what if it's initially bad news, and then maybe we get some dollar weakness, or the inverse happens and we get some dollar strength because people are running to dollars, they're running to treasuries, and they're running to cash. So at some point, guys, that probably will happen, and I think that will be expressed in everything that we got going on. That convergence is happening, guys. So these two things are running together. It kind of happened a lot this week. I'm seeing a lot of it play out in the markets, just being in the markets as much as I am, but it is happening. I'm just letting you guys know it here first, so that way you can start to plan accordingly. Don't always think it's going to be the initial reaction of what you're thinking. Maybe if unemployment claims came out at 500,000, that might be negative for the dollar, but maybe it'll swing the other way because people will be running to dollars and getting out of other assets, right? So maybe that'll strengthen the dollar, right? At some point, like I told you guys in my last video, there was a pivot. There was a deflationary pivot where no matter what the numbers were, basically we had a deflationary response. We had a positive response for the dollar. So be mindful of that, guys. At a certain point, that will be better news for the dollar. Because maybe the Federal Reserve won't change their stance regardless of the impact of the data, right? They're just going to continuously be hawkish. Well, if that's the case, then yeah, it's going to be good news for the dollar. We got a lot of people speaking tomorrow. We got Treasury Secretary Yellen, Governor Macklem is going to speak. A few people speaking here. What is this? U.S.-China economic ties at the Johns Hopkins University. So probably going to be a non-event for the afternoon there. I'll probably just let all them. I'll probably do a little bit of trading in the morning once we digest these numbers here, and then I'll probably be done until they're all done speaking, because sometimes I can't move the markets and I don't want to be caught in the crossfire. So we'll scroll down here, and then last but not least, Friday. PMIs, guys. Those PMIs are going to be a big deal. We're going to get probably a lot of 40s as opposed to the 50s, as we talked about before. And I'm expecting a little bit of give back. If we have some dollar weakness on Thursday, we might have a little bit of give back just due to how much of the Eurozone is releasing their numbers and being negative there. So we might have some dollar strengthening towards the end of the week. Head on over to the Patreon for more signals and different things there. Let's talk about the most liquid pair in Forex, the Euro/US dollar. So go out on a 1 hour chart here, guys. We've only been trading for a few days here, heading into the 20th here for trading day. We just started at 5. But basically, coming off the weekend here, we had some dollar strengthening happening here. Like I was saying, those reports on Monday gave a nice reading, and then after they were digested, we did have kind of an uptick for the second trading day there, and then we kind of are just trading in the range, to say the least. We're kind of in a very consolidated pattern. We're trying to see if we're going to break that 9 handle for sure all the way, or if we're going to head higher. I don't have a crystal ball, guys, but if I had to guess, probably breaking that 9 handle. Things are definitely slowing down. It'll be expressed in the data, and like I told you, convergence will happen. I've seen this happen before, about 15 years ago, thinking it's going to happen again, guys. Could be wrong, right? It could be wrong, but that is my opinion about what's probably going to take place here. Just knowing what the Fed and the markets want to do, and now they both have to agree upon what's happening. Yeah, that's where I see this guy going. All in all, let's go out on a 5-minute here. We're already expressing some dollar strengthening here for tonight to start out. Tomorrow, depending on the data, right, the unemployment claims, we might have further sell-off, further dollar strengthening. Also, do not forget this geopolitical risk in the background here. It's kind of a big deal. Germany, Poland, and others are pushing for new sanctions on Russian nuclear energy. So make sure you keep that mindful. Even though the VIX is definitely on a drop, just be mindful of that possibility there, messing up your trades. So that's pretty much what I got for that so far. Just range bound, consolidated pattern, a couple of tops here. So you remember I told you get 2 tops, right? Typically you're going to see a lower bit there. So let's get you guys now over to gold and silver. Got a few things to talk about there for the metals. Now I'm going to start off with silver. Silver is very resilient right now. It is holding its own. But how long can he stay in the fight? He or she stay in the fight here? We kind of bid up a little bit. Let me go off on the 1 hour here so I can get a little bit of a snapshot. We kind of sold off from that 26 handle, struggling to keep its head up above that 25 handle. We had a little bit of a run up this morning, which was nice to see, right? Early morning trading, but then it kind of just plateaued out, possibly on its way back down below the 25 handle. I know a lot of people, were tough about that. We're struck about that, pulling back, but it's going to happen, guys. Nothing always goes up and nothing always goes down. We will have these staircase effects. So at some point, you got to just be mindful of the trajectory. We could have a huge pullback, or we could have a corrective pattern to get us a little bit higher. So we'll just have to pay attention to that. Let's get us over to gold now as well. Let's take a look. Gold definitely pulled back. It is struggling with that 2,000 handle. I don't know how much longer it's going to hold it. We could push above it, but we've been trading around it too long. It is a strong psychological factor, which means people might feel more comfortable trading under the 2 handle. I see that probably is where it's going. It's on that trajectory. I mean, if you go on a 4 hour chart, we had that nice little bid. We all rejoiced when it kind of made its way. But it is definitely on its way back down. Again, deflationary factors are at play, guys. Tons of layoffs, tons of risk off, if you will. So that's where I see that going, guys. Had a huge sell-off early morning there on the 19th there. So overnight, basically the late Asia, early Euro session just sold off there immensely, $30. So if you were involved in that trade, you definitely made some coins, but pun intended. All right, guys, so let's get you guys now over to WTI. Man, I got some things to talk about there. WTI is under $80 a barrel. Oh my goodness. Gas is about 280, 290. Phenomenal numbers, guys. Look, it's on its way down even more. I'm loving that. I know a lot of people who were long on this is not loving that. They thought this was going to go up for forever, but at some point, if nobody's going to be pumping gas in their cars, I mean, this is going to continue to slide, right? So we're definitely seeing that take hold here, take effect, and it's sliding. It's currently sliding even right now, 1 hour, down 12 cents, 6 hours, 84 cents. So it's definitely on the move. We will go out on a 1 hour so we can take a look at that here. We started off trading a little bit high, right? Remember, I told you it could go up. This was the one commodity that I thought was possible for it to go up. But deflationary factors, like I pointed out, could take over. And right now, that is taking over despite the cuts in production, despite everything going on, despite even the negative 4.6 barrels for the week. We still got that downward slope. So be mindful that this could be a corrective pattern. So we might hit some type of support level at some point. Be mindful of that. All right, just definitely be mindful of that. I do not personally trade WTI. It's too volatile in a day's period, and I like to be a little bit more precise in my trading as well as my investments. So WTI I do not partake in. Let's get you guys now over to the cryptos. Got a few things to talk about there. BTC is struggling with that 29.30 handle, guys. It definitely did shoot up a little bit here. It got above that 30 handle. I liked it above there. I thought it was a healthy number, but I just don't know how long it's going to last. It does directly correlate with the market. So if the markets start to tank, more importantly, I think it kind of more resembles the Dow, if I'm being honest. So if we have a little bit more of a pullback there, we're having some questionable things happen there. We're having those treasuries rise, right? We're having that stronger dollar expressed right here, guys. And then people might be running to more dollars, losing value in the BTC. Again, this is more of a speculative asset at best. I do use it for certain parts of median of exchanges, that certain things that I'm involved in. But as far as a storage of wealth, of capital preservation, this is definitely not it. Let's check out the overall coins, guys. A lot going on there. Let's see where Ethereum is. 19 handle, still okay. I mean, I think that is probably holding its own compared to BTC. We might see a huger pullback, but I mean, we're down 7%. But you're going to see a larger percentage basis due to a smaller number. I think actually BTC being down only almost 5% is a huge drop, especially when we're struggling to get above that 30 and hang our hats above that 30. So we might want to be mindful that Litecoin isn't doing too bad, even though it's 11%. Again, guys, they had a huge run up. We're talking from, what is this here? The 19th. We're talking from basically March, middle of March, all the way up to this point. I mean, a huge run up. So BTC is definitely, due for a nice little healthy pullback. So do not freak out. Where I see the price going, I'm not really sure. It's very speculative. So, maybe some people have better info on that than me. But I see if the dollar gets extremely strong, people will be running to those, right? It's all about psychology, trading analysis, and staying ahead, guys. So, I mean, it could pull back to the 25 mark. I definitely can see a price, a bidding zone up in that 25 mark, 25,000 mark, but we probably will still trade in a range between 25,000 and 30,000 most likely. Again, those are my opinions. Mike, make sure you guys do your own due diligence. Get you guys now over to the dollar index, which virtually drives everything. Dollar index is actually holding itself up, guys. I mean, starting the week here on the 17th, about the 150 mark, and we really shot up on Monday. And then we pulled back significantly, but it is holding its own. It is definitely looking like it could possibly take up a little bit, maybe the 103 mark, 104 even. We go out on a 1 year here. Basically about this time last year, it could possibly get back up to that, about that 105 mark. So be mindful of that, guys. We are entering into a slower period. We're seeing this bid happen right now. The 1 month is kind of looking a little bit downward on the trend, right? We're having a lot of high peaks and some lower lows, right? Lower highs and lower lows. So we're definitely seeing that occur, but we are starting to see that convergence period that I was talking about. Maybe we're converting. converging to a more dollar strengthening environment. Let's get you guys now over to the stocks. Got a few things to talk about there. Stocks end of the day mix, just like the last time. I think last Friday when I did this one. I'm sorry, for Friday. Yeah, they were mixed as well then too. But we're paying a heavy focus on the VIX. The VIX is steadily declining, which means external market forces are definitely easing, which we love to see. We love to see those market forces definitely cooling off, because it was definitely distracting the markets overall. It was distracting algorithms, it was distracting my programs, it was distracting me. It's nice to be able to bet on certain trades and feel good about the position and not having it swinging the other way just due to the volatility of the VIX being above that 20 mark. Again, guys, if you want to know what's the key, you have to see this gauge of the VIX, right? We want to see it what? We want to see it below the 20 mark. Being below the 20 mark puts us at ease as to what could be possible, right? Bonds also, guys, let's talk about the bonds here. Bonds are definitely shooting up. We're having those yields pushing higher, which means they believe the Fed. Maybe people are starting to believe the Fed. They want that inflation down to 2%. We're starting to get them writing in line of what they're supposed to be. We're starting to see it on invert, right? It starts to invert obviously back towards the 6 month, because they believe after the 6 month mark that basically by October that we'll be in a full blown recession by that point, and then they'll have to lower rates, right? As you guys can see it expressed throughout the rest of the from the bills to the notes. So essentially, guys, a lot going on. So many different things going on. Just keep you guys up to speed on what's going on every few days. Let's head on over to bar chart. Got a few things to talk about there. Actually, let's go back to the markets here. Tesla's not doing that great, guys. I had a downward trajectory target for the 1 and 4 hour for Tesla, just because I knew people were not going to be able to afford those super expensive electric vehicles. It just is what it is, guys. I mean, you're talking, I mean, for one of their cheapest models is like 80,000, and then they go higher than that, right? So I mean, you gotta understand that not everybody can afford those, and they, at the end of the day, even though they do SpaceX and other things, they are still a car maker. They have subsidies, but they still have to earn. They're still a publicly traded company, so they still have to earn a net income for their shareholders, right? And then, as you guys can see here, earnings dropped more than 20%. I won't bore you with the specifics, but pretty much the long and short is, I see them guys going down to, because they did a split. I see them guys maybe going down to $1.50 within maybe a two month period, 3 month for sure. Again, that is my own opinion. Make sure you do your own due diligence and talk to a licensed professional. But I already have an option for that set out for a year. I didn't want to put too much pressure on going out farther than that, but also I didn't want time decay to ruin the trade. So all in all, guys, I appreciate you guys joining me. Let's get over the bar chart real quick here. Look at the stock pressures as bond yields climb on inflation concerns, right? And with those concerns being a keen focus on the system will subside those concerns. Look at that, guys. Gold on that 2,000 mark pretty much ended there. Everything is looking healthy, guys. This is for the first time in probably a few months that I'm viewing everything in a healthy range. I'm seeing the dollar get stronger in the markets. The G7 is allowing the dollar to get a little bit stronger. It did take a huge beating. So they are going to allow the US dollar to boost itself up. Remember, we had that BRICS situation that's challenging the dollar. So the G7, the G20, and the G17, they're all together trying to make sure that the dollar still reigns supreme. There's a lot of existential forces at play here, and you got to keep those in mind when you're in these markets, guys. But I appreciate each and every one of you. Please like, comment, share, subscribe. Big thumbs up to my 6.1. And as always, guys, in order to be profitable, one must have the knowledge and insight about the next trader position to absolutely, positively stay ahead of the curve. I appreciate each and every one of you. Please like, comment, share, subscribe. And happy trading. Finish up the week strong. Make some money. And I'll talk to you guys on the week ahead video on Sunday.